Welcome back to Accounting 470. This is the class on nonprofit. Let's go ahead and get started on the next chapter. The next chapter that we're going to be covering is chapter 2, and we're going to be looking at, while there is a lot in this chapter, there's actually just a few learning objectives. So we're going to look at GASB, we're going to be looking at the conceptual framework, then we're going to look at the three activities of the government as sort of a baseline. Then we're going to look at the financial reporting model, the integrated accounting model that GASB has come up with. And lastly, we're going to cover fund reporting, which is something that will be new for most accounting students. What is a fund? How does it fit in with governmental reporting? And what are the rules? Boy, these are going to be things essentially that I find most accounting students who haven't encountered governmental or nonprofit accounting are going to start to wonder what's going on. And as you probably got a little sense, we did chapter 14, non-governmental not-for-profits. And those are very similar to for-profits in a lot of ways. Obviously, you saw some differences, but it's also guided by FASB, and so therefore, a lot of things are quite the same. Here, we're going to start to get into the GASB, the Governmental Accounting Standards. So let's take a look at this first one. So we've got some GASB reporting is the title here of Learning Objective 1, but it is the conceptual framework, and we have to remember we're going to be reading through these. We're not going to go through every one of them. We're going to go through 1, 3, 4, and 6. And these are concept statements that GASB has come up, not for the general accountant, not for the not for your CPA people. These are statements they came up with towards the standard setters, saying, as you start to make governmental accounting standards, these are the concepts that you need to keep in mind as far as how you craft the rules. So to understand how different or what are the purposes, in other words, to understand the actual reporting model, you have to look back and understand what is the purpose. And that's what this section here is going to be looking at, the purpose. So there are 6 statements. We don't cover number 2, which has to do with service efforts. Now, that's an important activity of a not-for-profit, but service efforts are more narrative, and they're part of the financials, not part of the financial statement, so we do not cover them, at least in this course. And concept statement number 5 is an amendment to number 2, so it's just more of the same. So we look at 1, 3, 4, and 6. So let's take a look at the first one. What are the objectives of financial reporting? Well, as broad strokes, the government financial statements should provide information that can be used to assess the government's accountability and assist users in making economic, social, and political decisions. So think about it. What are the financial statements for-profit? It is mostly for investment purposes. So you can see how radically different this is, making social and political decisions. Well, you have to remember, your government, when you're looking at your governments, it could be your local or your state government or something like that, they're making decisions that influence your life. And in fact, they're sort of involuntary, right? You can choose to invest in a company or not invest in a company. But once you live in a location, you're within a certain political jurisdiction, you have to accept the decisions made by the government. So you want to make sure that they're making the right decisions because you're sort of along for the ride, so to speak. What are the 3 objectives? They're supposed to be accountable for the resources that they have. They're supposed to be good at managing them. We use the phrase efficient and effective that you'll remember from information systems. And they have to be done in accordance with legally adopted budgets. So this is different from a for-profit company. Legally adopted budgets, meaning it's law. Now, as a regular commercial business, when it makes its budget, that's not a legally adopted budget. But when a legislature, a state or a local, decision-making group makes a budget, it has to be legally adopted, and then therefore there are contractual obligations. So this is another point that's different. We also want to assess the operating results and what constitute operating results. We'll see that these are a little different from what we would consider the income statement as operating results. And because the government is there to provide services, what is the level and quality of the services? And do they have the ability to continue to provide those services going into the future? Who uses these statements? Well, citizens, the legislative group, oversight bodies, creditors. You notice we don't have the word investors in there because there's no quote unquote investor in a governmental organization. This last part here is what are the financial statement characteristics? We actually covered these in regular accounting, but because you only knew one type of accounting, GAAP, you probably weren't paying attention to what were the required characteristics. But some of these should be understandable, even if you don't really remember the ones that we studied in principles. That might be something for you to go back and look. What were the required characteristics of the financial statements for, regular GAAP financial statements? So the characteristics here are understandable, reliable, relevant, timely, consistent, and comparable. So you probably recognize at least comparable is one of the ones for GAAP statements. Statement number 2, we're not doing. Statement number 3. So if the first one is the objectives, the second statement is what is the communication, or how are the financial statements supposed to be constructed? In other words, what should be in there? So what should be in there is that we have to have recognition of items in the financial statements. And we'll talk a little bit about the different types of items. Now, in GAAP statements, we've got 6 primary accounts. We've got assets, liabilities, equity, revenue, expenses, and retained earnings. But we do not have, dividends, not retained earnings, dividends. But we do not have that same group of accounts or general accounts in the governmental statements. So we're going to have to discuss how does recognition happen and what are the accounts that we're dealing with. That there are any information that is essential to the user's understanding should be in disclosures and notes, and that's similar to the GAAP financial statements. In addition, most GASB has required that there are some required supplemental information, the primary one being the management's discussion and analysis, but there are some other ones. And this is because for the lay reader, for the general citizen, they need some important context to understand the numbers. And then, of course, there will always be some other supplementary information, useful but not essential. If it was essential, it would become a required supplementary information. So those are the types of things that we want to have in our statements. What's the recognition? What are the disclosure? And what are the required items? Concept number 4, what are the elements? Well, we've got 7, and so pay attention to these. These are basically our accounts. Assets. Now, assets are things that a company owns, and generally, assets represent future revenue, right? If you own inventory, your business is not there just to own inventory. It's to convert inventory into revenue. Same with even long-term assets. Yes, you have a piece of equipment, but that piece of equipment is being depreciated. You're allocating the cost over several years. And what are you trying to do? Well, you're not directly turning that equipment into revenue, but the reason why you're costing it, or the reason why you're expensing it over time, remember the definition of an expense in GAAP terms is anything that supports the generation of revenue. So you are slowly using up the equipment, this asset, depreciating it, in hopes that the output of the piece of equipment is generating revenue in the future. So that's what an asset is in GAAP. An asset in the governmental statements is resources with the present service capacity and that the government controls. So these are things that allow you to provide services. And just notice here when we say present service capacity, you'll find out as we go along that a lot of governmental accounting is on the basis of this reporting period. In this reporting period, do we have adequate resources to provide services in this period? Because, of course, what is part of what you're doing with governmental reporting? Do we have the amount of police and fire resources to be able to have coverage this year or this quarter or whatever it is? So assets are resources that convert into service in governmental lingo, whereas assets are under for-profit. Assets are resources that we own that we convert into revenue, right, and that we convert into net income. So that's the first one. Deferred outflow of resources, consumption of net assets that apply to future periods. Okay, that's a new one. Let's just put a pin in that one and come back. Liabilities, present obligations to use resources that government has little discretion to avoid that we can't put off. So again, they're present obligations. So you can think of assets and liabilities. They're really focusing on current assets, current liabilities. Here we have, next one is deferred. Let me move. Deferred inflows of resources. Again, that's something new that we haven't seen before. And then let's look at what is instead of the accounting equation, what do we have? Net position. I shouldn't maybe put a minus there. Net position is the residual of, meaning net position equals the assets plus the deferred outflows minus liabilities minus deferred inflows. In other words, to increase net asset position, two things decrease. Well, assets and liabilities we're pretty clear on. Assets are resources that we own or that we control that allow us to provide service. Liabilities are things that we have to pay for, obligations, expenditures that we need to use up that we have to use up of the resources that are necessary to provide service. So what are the other two? You have to think of them as focusing on we have them or we don't have them, and are they useful to the present period or are they not useful to the present period? So if we look at this previous one, consumption of net assets in a future period. Well, perhaps we don't have it. Perhaps we have something now, but it doesn't go away until later. So it's an asset, but it's not an asset for present service capacity, right? And if you look at deferred inflow, acquisition of net assets that apply to future periods, perhaps it's an asset that is already earmarked for future use, and therefore we shouldn't count it as an asset capable of providing resources. These are sort of our first initial experience with these. We'll get a lot more. I guess, practice with them. But just think of assets and liabilities are things for the current period. And, if you can think about accruals and deferrals, there's some sort of timing mechanism, right? A prepaid expense is meaning you've bought a prepaid rent asset and you expense it over time, or you have unearned revenue, which is you have the cash and then you record the revenue as you provide the service. So we already have built into GAAP sort of this idea of the timing between cash and revenues and expenses. So think about these as being timing mechanisms between resources we have or now that we can't use in the future or that we're supposed to use in the future. And so therefore we can't count them for current service capacity. So you can think of it, is it service capacity that we don't have to the future, or is it we don't have it now, but it's present, it's going to be service capacity in the future? And like I say, we'll have more examples when we look at, they're actually fairly, I don't want to say rare, but they're sort of on the outskirts of kind of things we talk about, but because they can't be defined as assets and they can't be defined as liabilities, they have their own definition, and therefore they're very different from what we've seen before. So keep those in mind. So those are our kind of four accounts. And then we have inflow of resources and outflow of resources. You can think about these as revenues or expenses. We're going to be using the word expenditure quite a bit, depending upon what part of the financial statements we're looking at. And that's because, remember, an expense has a very specific meaning. Expense is there to help generate revenue. Well, here, revenue is more of resources that have been given to you to help you provide service. So an expenditure sometimes is more the appropriate word, and we'll see different times in which we use that. The last concept statement is what is the measurement? Assets for to provide service are recorded at their initial measured amount. In other words, when we assume control, when we buy them, when they're given to us. When assets are converted to cash, sometimes that happens. Someone donates, contributes something to us, and we convert it to cash. A remeasurement has happened, and so remeasurements are part of governmental accounting. We'll see that. And remeasurement amounts are useful when we're trying to determine the availability of resources to acquire services. In other words, we have this asset. Will it allow us to provide service capacity? Well, we need to pretend, or we have to figure out what is the dollar amount, which is going to be essentially a remeasurement of fair value, although there are other ways to remeasure. And we're going to say, okay, that dollar amount is enough to provide or is not enough to provide to support current service capacity. What are some measurement attributes we could use? Well, historical cost and fair value. Those are ones we use for GAAP in our commonplace. But here are two others that we're going to run into at some point: replacement cost and settlement amount. And don't those sound more like insurance claims? So we're going to be dealing with a bunch of different concepts. So keep in mind your GAAP training. You've been doing a lot of GAAP training, but recognize that the point of governmental financial statements is going to be pretty different from what you've learned before. So let's buckle up and see what we can get going next. So here we're looking at the three major activities: governmental, business type, and fiduciary. You may have seen some of these commercials. Can't remember. Is it State Street or, is it Schwab or something like that? In other words, the commercial is about, which broker should you use? And one broker, is questioning another broker about, don't you get hidden fees or something like that? And they say, no, we're a fiduciary, meaning they have fiduciary just means a responsibility for someone else's money. And so sometimes governments have a responsibility for, well, you would think for the citizens. But in addition to that, other parties, they might be holding cash or assets for another governmental entity or something else. And so governments can act as fiduciaries for certain things. Well, let's start off with the governmental, though. And that's the thing that we normally think about with a government. And if we're talking about a general purpose government, like a state or local government, your township, your city, there are some core services. Core services can include what we see here: police and fire, public works, things, roads and bridges, cultural things, recreation, educational, social services. And then you have some other things necessary to support all of those core services, which are going to be the support services, such as you have a city manager, or you have, someone who is in charge of, the town hall, who's the mayor, or, something like this. There's going to be data collection, processing, because you are, a lot of times state and local governments are taxing land, right? That's one of the things that the federal government doesn't do, that is devolved down to state and local governments, is that, property taxes are going to state and local. And so you need some data collection and processing to maintain those records, as well as demographics and census and a bunch of things like that. There's also finance support and hiring, personnel kind of things. We'll find out a few other type of support activities, but you can imagine all those sort of, what we normally call back office type things are support. And that's part of the overall primary governmental. Business type activities, So I'm going to use at times the phrase exchange and non-exchange. And so a non-exchange means like a contribution or donation. Someone gives something to the government, or and the government isn't responsible. There is no direct. Someone gives money, and therefore we turn around and have to perform a service. That would be an exchange, right? If you had a park, and like when you go into certain parks, you got to pay for the parking, or you got to pay for the entrance to the park. Or if you go on transportation, like if you go on the city bus, you pay the bus fee, and then you get to ride the bus. Well, those are exchange transactions. The customer or the person in the public citizen gives money, provides quote unquote resources, provides cash, and a service is provided in return. Those are going to be what business type activities are, or business like activities. And they're mostly self-supported by user charges. Public utilities, right? So the water and gas people are supposed to be self-sufficient by charging market rates, or sometimes they're subsidized depending upon where you are. Transportation systems, airports, public golf courses. There's all sorts of things. Swimming pools, public swimming pools. These are all run as a business-like activity in that they charge people for the use, and people then get some sort of service or some access to a service in return. So there are governmental activities, which are I would say non-exchange. They're you raise taxes and you provide these services because they're part of law, or they're part of the requirement of government. There are business type activities, and then fiduciary activities. They hold things for other governments, and you can think of I'll just give you kind of an example of like when I lived back in Portland. The actual city of Portland was a fairly small area, but whenever you hear about a city called the Greater Metropolitan Area, well, that means that there's a bunch of other smaller cities around there, and they're sort of all working as one. So Portland has a light rail system that extends to all these other little cities, and so maybe they collect the tax they collect the fee on behalf of the other small cities, or maybe they charge the other cities for the providing the services. Sometimes there will be a central government to where all the smaller local governments around a big city, maybe they put all of their money into one big investment account that the central main city is managing. It could be a retirement account. If you've ever heard of CalPERS, the California Public Employee Retirement System, that is like that's a statewide system, and they're holding funds on behalf of a lot of different people. And they're a powerful investment group. They have something like $500 billion $500 billion under management. So some of these fiduciary responsibilities can be quite big depending upon the type of government. Let's see. Those are the primary responsibilities. They will be named a little bit differently here and there, but we'll try and focus on core services, things that they do that are self-supporting, that we call business type. And then there's this third category of fiduciary, which they act as a custodian or trustee for other entities. Could be another government, could be some other type of nonprofit. They hold their cash for them. Okay, let's get into the meat of the chapter, and this is looking at the big integrated model. Now, what I want to do is I want to bring up, let me see if I can bring this up here, the chart from the book. And the chart from the book is this depiction from the book. I want to go through this and kind of point out all of the important activities here. Let's see. We've got my cursor. So first of all, I want to show you that this integrated accounting model for state and local governments has two types of financial statements. One is going to be this government-wide financial statements, And one of these is going to be the fund financial statements. So we have two separate set of financial statements. Now, just be aware there are governmental activities within the government-wide fund, and there are governmental funds within the funds. So a little bit of paying attention to the precise wording of a certain type of financial statement or where it's coming from, because as you can see, we've got the word government or governmental in several places. Notice that even though there's a couple of silos or a couple of columns in each fund, and you can see they somehow overlap between the two types of financial statements, that they don't perfectly overlap. Like here, there's fiduciary in the funds, and in the government-wide, there's the discretely presented component units, and then there is not quite perfect overlap between business type activities and proprietary activities, but there's still a lot of, I guess, similarities. Notice that across the columns, you have two different types of statements. Well, I would say there's three here, but you're going to have a statement of net position and a statement of activities. So get used to variations of this phrasing. Statement of net position is going to be a balance sheet type thing. Now, it may not be the balance sheet from GAAP, which is assets equals liability of equities. For most part, it's going to be assets and liabilities and what are your net assets, because if you think it through, there is no equity part of the equation for a governmental set of financial statements. So when we talk about net position, that's going to be some sort of balance sheet or netting out assets and liabilities or netting out accounts. Statement of activities, and sometimes they actually phrase this statement of the changes in net position. So if the net position is the as of date, as of the date, how many assets and liabilities do I have? If you say the statement of the change in net position, that's going to be the use of assets, or the expenditure of liabilities. So statement of activities is sort of the income statement. The year-to-year operating activity, the statement of net position, is going to be the as of a certain date, balance sheet. Down here in the funds, they call it the balance sheet. Sometimes they call it net position too. And then they have statement of revenues, expenditures, and changes in fund balances. So they have these crazy titles. I wish they would harmonize them or come up with, at least easier to say than that. But again, you can see that there's one that's sort of a balance sheet and one sort of an activity or changes in fund balances, they actually say here. The only additional thing for the proprietary is you notice that we've got something called a statement of cash flows. And then when we look at fiduciary, here's the statement of net position and then the statement of changes in net position. So again, at a minimum, you will have a net position and a change of net position, no matter kind of how they term them. And then with the proprietary funds, you also have a statement of cash flows. So governmental-wide have three columns. Let's take a look at these. Governmental activities, business type activities, and discretely presented components. You could think about governmental activities, business activities. This is the primary government. This will be kind of all reported together, but there are going to be some independent units within a government that need to be maybe presented separately. Let's say you have a big metropolitan area, and maybe the airport or the port, if you're on the ocean or on a big river, maybe those are so separately run that they actually present as a discrete component. In other words, where they raise their funds and how they run their business has almost nothing to do with the rest of the governmental activities. And so those might present as a discrete component. And you notice that there's no, I guess, comparable thing down in the funds. Also, when we talked about fiduciary activities, the fiduciary activities are only reported in the funds and not in the government-wide statements. So if we take a look at some of the other things, I would say that the government-wide, when we're talking about the government-wide, it uses accrual basis, which is what we are used to under GAAP. The funds use a modified accrual, which we'll talk about here in a second. You have the balance sheet, assets and deferred. If we wanted to look at the statement of net position, the statement of activities, they give us some examples of Denver's financial statement. So let's take a look at those here for a second. So here's the City of Denver statement of net position, the balance sheet. You can see that we have assets here, and we've got cash, due from other governments, restricted assets, and that sort of thing. So we can see here the primary government, governmental activities, business activities, the total of those two under primary government, and then the components listed separately. If I go to the liability section, so you notice, well, first I should say, let's see, after assets is listed the total deferred outflow of resources, liabilities, total the deferred inflow of resources, and then you will add up assets plus the deferred outflows minus the liabilities minus the deferred inflows gets you to this net position. Now you'll notice that the total net position, while here at the bottom, is shown, but they don't just give you, as we would have net income, they don't just show net position in one category. They show, at least Denver has several categories, and I would say a minimum for most jurisdictions, they would have at least restricted and unrestricted. Now, Denver has broken it out additionally into net investment in capital assets, and you can see, okay, that's a fairly big number, and so because that is, perhaps they have a major fund that they cover, and therefore that's something that they also break out into the net position. But you see that already what we were learning before, assets plus deferred outflows minus liabilities minus deferred inflows equals our net position, and the net position is shown as at a minimum two different categories, restricted for and unrestricted. And remember, part of this is because we're trying to say, what are the resources that are available to be applied towards current services? And so if some of our resources, some of our net assets are restricted for only certain types of services, we kind of want to know that, or at least I would say the general citizen would want to know that, and other users of the financial statements. So restricted versus unrestricted is important. And I've made this comment before in certain classes that one of the, I don't want to say failings, but one of the weak points of GAAP financials is that we're only historical looking. We can only say what has happened. There's no way for us to earmark things going forward to say, I'm going to set aside this amount of cash. In other words, there's no T account for, cash that I'm setting aside to replace a piece of equipment. We may have a capital expenditure budget, but that actually doesn't show up as an actual account on our financial statements. That is partly in the notes and that sort of thing. But it would be nice to, maybe commit some companies to showing that in the financial statements. But we don't have that ability to look forward, whereas governmental statements have a number of ways to talk about what are future uses of the current resources. If we jump back here to our little outline, so we just talked about the statement of net position and how it's formed. It's on accrual basis. We're going to have the statement of activities. So net position is sort of our balance sheet. Statement of activity is going to be sort of our income statement. We're going to be reporting resource flows as expenses and revenue. You'll notice that we do not record the expenses as, what we would normally record them under GAAP is, for example, on the income statement, we would break out what type or how these expenses are classified, whether they're an interest expense, a wage expense, supplies expense, COGS as an inventory expense. under this statement of activities, we look at them not by their normal classification, but by what program or what function of the government were they attached to. So we list them under the function or the program, and we list expenses first, then revenues. In other words, these were all the expenses necessary to provide services, and then we look at whether the revenues, whether they're tax revenues or other sort of things, were the revenues were they revenues sufficient to cover all of our expenditures. So we'll take a look at that in a second. We're going to break out the differently, just the exchange versus the non-exchange. In other words, what are the revenues we got for things that provided services like the bus service or the subway or whatever other things that we're doing, versus just a normal tax. And we're going to look at program expenses. So normally we would say revenue minus expenses net income. What we're going to say here is program expense less program revenue results in a net expense. And we'll look at those for separate columns for governmental activities, business type activities, and the component units. And then probably the second page that we'll look at is the general revenue, which is taxes of all type. So let's take a look at a couple of those. First, let's just go back and remind ourselves we're still in this upper area. We're still looking at government-wide. We had looked at the statement of net position. Now we're looking at the statement of activities. And so statement of activities, here is our program revenues. And you'll see here are the expenses. Here are the expenses. And then you'll look at the revenues. And then you look at the government activities, the total, and then the component units are just listed down here. If we look at the bottom part of the same statement, it's a little bit bigger here, but general revenues. So you notice that a bunch of it is taxes. So the general revenues are sort of the non-exchange revenues. And then you have total general revenues and positions. So the first page is we're providing services, we have expenses, we have other grants and contributions. You can see those are smaller parts, and then we find out what the total is going to be. Here are the governmental activities, and we try and keep them. You notice down here the expenses are not listed according to what we would consider normal gap classification, but by which program or which part of the government it's doing. So public safety, public works, park and recreation, cultural activities. Looks like they're spending a lot there. General government obviously will be, one of the big ones. Here are the business type activities. In other words, where they're providing a service, and so therefore they can charge for the service. Denver Airport. So here, airport typically is one of those. A lot of times it's a discrete unit, but here they've got it under it. Environmental, golf course, and those sort of things. So here's the net expense revenue, changes in net position for the primary government and the program revenues. And these will be what we're looking at here. You saw the governmental activities, except when we were looking at the statement, they were along the side, right? And then broken out according to business type, and the discretely were kind of just over in its own column. So that is the government-wide statements. We're going to be taking a look at fund financial statements now, which is quite a bit different. Fund financial statements, and we'll discuss why there are fund financial statements when we get to that section. For the first part, though, let's go back to our information page. Let's take a look at that. And so we've got fund financial statements, and we'll start talking about that here and going into this. And this is where the previous two, the net position and the changes in net position, or the statement of activities, is more straightforward, even though it seems a little odd. Fund reporting is typically where students start to get a little bit antsy as far as they're not sure what's going on. So in the fund financial statements, there are going to be three types of funds: governmental, proprietary, and fiduciary. And there are going to be two types of financial statements that we do for all of those. A balance sheet, again, sort of a statement of net position, and then a statement of, and this is a very wordy thing, statement of revenues, expenditures, and changes in fund balance. So that's the operating statement. Let's talk about a little bit about what funds financial statements are. We'll actually have a little bit better definition with the next learning objective. They assess the accountability of financial resources that were raised and used. Now, remember, when we use these resources, we're doing in compliance with a legally adopted budget. So this is more of a sort of a check and balance to see you were required by government and through the budget to provide police services or provide fire service, and you were given X amount of resources, and how did you use them, and did you meet your obligations? On the balance sheet, we're going to see a fund balance. That's the current financial resources less the claims against those current financial resources. And this is part of how fund accounting differs from the government-wide, in that we're more focused on the current period, not what are the total resources available today and in the future, but this period, how did you perform this period? Well, that's part of an operating, an operating focus, or at least a governmental fund focus, is that what are the resources you have available now versus what are the obligations to provide services now, and do they match? Or if they don't match, how do they not match? So you'll see that non-current assets such as plant, property, and equipment, they don't provide current resources, and therefore, and also non-current liabilities such as investments and that sort of thing don't consume current resources. So neither of those are reported or included in a fund financial statement or a fund balance sheet. They are present in the government-wide statement of net position, but they're not present here because it's outside the scope of a fund financial statement. If we were to look at the statement of revenues, expenditures, and changes, I will just say the balance sheet and the statement of revenues, expenditures, and change are done. These two fund financial statements are done according to modified accrual, the governmental fund financial statements. And what is modified accrual? Well, if you could boil down GAAP or accrual to one statement or one, I guess, pair of statements, is accrual really boils down to we recognize revenue when it's earned, and the matching principle of expenses, we record expenses when they're incurred in support of revenues in the same period. So what is a modified accrual? Well, we're also going to talk about revenues and expenditures. So revenues recorded only if measurable and available for paying current obligations, which is what we're looking at here. So think about that. It's not revenues recorded when they're earned, because a revenue to a for-profit company is different than a revenue for a governmental entity. A revenue is resources and assets provided them to do a job, right? Not revenue is what we receive from the customer in payment for goods and services provided. Somewhat similar concepts, but different viewpoints. Revenues recorded only if measurable and available for current period obligations. So remember, when we're talking about the fund statements, we're really talking about, in this current period, do we have enough resources to be able to provide the services that we're legally obligated to provide? And so the modified accrual is taking on that thinking. Current period only. So therefore, we're not in the balance sheet. We're not measuring non-current assets or long-term assets or non-current liabilities. We're only looking at what is available this term. And basically, we allow everything else to be covered in the government-wide statements. For the expenditures are amounts of resources to be used to either acquire an asset, to provide a service, or recognize when an obligation will be paid, again, from current resources and it's been incurred. So an expenditure is not the same as an expense. Remember, expenses are things that we consume and use up to generate revenue. Well, here we don't generate revenue. Revenue is given us. Resources are given us through taxes or donations or however. And therefore, a revenue is not the same sort of thing under governmental as it is under GAAP or under regular, commercial business. And therefore, we don't use the word expense. We use the word expenditure. An expenditure is a more broad term. It's just an outlay of cash or a use of resources, but not necessarily to generate revenue. It's an expenditure to acquire an asset, provide a service, or satisfy an obligation here. So not expenses. Just have to keep that in mind. Before we go on to some of the other statements, is that you'll see that because the balance sheet in this particular one, in the governmental fund financial statements, is done according to modified accrual, and so is the statement of revenues, expenditures, and change in fund balances. Because of this, we have to actually reconcile them. So let's take a look back at our chart here. And kind of point out a couple of the things that I've just said. So here we have fund accounting. We have a balance sheet and the statement of revenues and expenditure. And you notice that these two do not go across the entire spectrum, whereas up here in government-wide, these two, statement of net position and statement of activities, cover all three of the different types of government-wide activities. The government activities, the business type, and the discrete units. Here, the funds, the balance sheet, and the statement of revenues, these are the ones that are covered in modified accrual. And we'll talk a little bit more in a second about what is a general fund versus major fund versus other governmental funds. But let's first just put them all under governmental. So we have a balance sheet, this statement. So this balance sheet is done under modified accrual. This balance sheet or statement of net position is done under accrual. And so we will have a reconciliation between these two. And similarly, this modified accrual statement of revenues versus this accrual statement of activities, we will have a reconciliation. So let's take a look at the balance sheet, an example of the balance sheet in this so that we can have an idea. So here again is the Denver, Colorado balance sheet. So look, balance sheet, governmental funds, specifying. And you have assets on hand. And again, they're listed by classification in order of liquidity. Here, liabilities, total liabilities, and the deferred inflow of resources. Did I miss the deferred outflow? Yeah, I guess they didn't have any. Total fund balance down here. And you have another number going on. We'll talk a little bit about these and we'll maybe come back to it, but pay attention to these. That, again, just like we broke out in the government-wide restricted versus unrestricted, you notice in the fund, we then break out the fund balance into non-spendable, restricted, committed, assigned, and unassigned. So each time we have sort of a net position or a balance, we then further subdivide that information. But if you notice, that information is not subdivided above. It's not like we have 5 columns for each of these. We just track those separately, and then we are able to break those out for users of the financial statements here. So we can break out the restricted versus the unrestricted for the government-wide, and here we can break out the fund balances according to their assignment. Here is the reconciliation, and if you read it carefully, you can see not only which two things that they're reconciling, but what direction. Reconciliation of the balance sheet dash governmental funds to the statement of net position. So if we go back here, the reconciliation of the balance sheet of the governmental fund, so this one, to the modified accrual to the statement of net position under the government-wide. And you'll see net position of government activity. So they'll start off in some ways, I've said very often there's a lot of similar mechanisms in accounting. They just adapt them for various things. Isn't this sort of like doing an indirect cash flow statement? You start off with, a number, and then you have some additions and subtractions to get from one spot to the other. And basically, if you think about what's the cash flow statement, it's taking the accrual net income and what are you reconciling it with? We don't call it reconciliation, but you're adapting it to the cash basis. Here, we're taking the modified accrual and we're reconciling it to the accrual. So again, a very similar sort of concept, even though if its actual implementation is slightly different. But I think the more that you can think of these sort of framework items and how we reuse ideas and mechanisms in accounting over and over again, it's easier to kind of keep track of them all and kind of, put them in their proper place and slot them in when you need them. If we look at the statement of revenues and expenditures, here you'll see general and human service and then other governmental funds. So what is happening here? If we go back here, it'll say general fund, major fund number 2, because every government has one and only one general fund, and then other major funds for which there are criteria for you to be able to call something a major fund. You just cannot just willy-nilly say it's a major fund. And then all other ones that do not meet the criteria of the general fund or the major fund are aggregated in one column. And so if we go back to Denver, they have one general fund, and then they only have one other major fund, human services. And then all the other governmental funds are aggregated in this column, and then you have a total. So we've got revenues, so you can see right here, taxes, and then other things they sell, license and permits, charges for services, etc. Expenditures. And again, when we look at the expenditures, they're typically by program. So you here see public safety, public works, health. Let's see where we go. Parks and recreation, etc. Total expenditures, other financing sources, and then your fund balance down here. And again, that was the statement of revenues and expenditures. And we have net change in fund balances, total government funds, and then we reconcile, if we read it here, reconcile of the accrual fund balance to the government-wide statement of activities, right? We are reconciling this modified accrual statement of revenues to the government-wide statement of activities, which is what it says here. So that would be the governmental funds, the two financial statements. Remember, there are 3 different activities. The other 2 are proprietary and fiduciary. We won't spend as much time on them, but let's just point those out. So be aware that proprietary and fiduciary are both accrual basis. And because they're both accrual basis, they are not reconciled. And one reason is because fiduciary is not even covered in government-wide. So there is no reconciliation, or there's no, separate reporting in government-wide. And proprietary, as we'll see when we look back at the main chart, is sort of split between two parts in the fund reporting, and they has a narrower focus in government-wide. So there's no direct, ability to do a comparison. Plus, they're both accrual. So what is a proprietary fund? Well, remember, we've used the term business-like or business type or for exchange. Well, here's yet another term that we're using for a self-supported business-like type of entity or activity. And so there are public services, like we said, transportation, or pool, or other types of for service fee, licenses, permits, that sort of thing. And they cover 2 different areas. There will be one enterprise services, which are public facing. In other words, they're providing services to the public and recording more what we would consider revenue. And then there are internal facing proprietary. In other words, they're providing for a fee, maybe not a transfer price that would match market price, but there is some sort of internal service that is, a lot of times they're consolidated services that they're, like maybe there's for all of the government, including the police, fire, and all the other different, different entities. Maybe there's a central purchasing unit for equipment, for like IT equipment, because they want to get better pricing, and so they've centralized the purchasing. And so that's, if you've ever worked in government or been around people in government, you realize that they have to do a lot of requisitioning, because there are a lot of these internal services that the police department doesn't have its own IT purchasing. The fire department doesn't have its own IT purchasing. It is centralized at some level within the government, and they have to get it from them. So proprietary funds, similar to business organizations, use accrual basis. In the fund accounting, they cover both internal and or public-facing activities. The public-facing activities they call enterprise funds. And they have 3 financial statements because they're very business-like. They have statement of net position, i.e. the balance sheet, statement of revenue, expenses, changes in fund net position. And you notice here we actually are using the word expenses. So it should be very obvious when we say the statement of revenue and expenditures, we're talking about a modified accrual fund. If we're saying the statement of revenues and expenses, well, we're talking about an accrual fund. So, or accrual basis fund. In fiduciary, you're holding resources of custodian or trustee for another party. We'll get to a point where we talk about that. That's not a large part of what we do, even though it's a very complex and difficult to, record. That shouldn't be our focus. We should be more focused on the business-like activities and the governmental activities, the fiduciary type, custodial activities. While there are some of those, and sometimes they can be quite big, they're fairly specialized, and unless you get directly involved in governmental accounting, they don't really improve our understanding of everything governmental, whereas the other ones speak more to the purposes of the governmental financial statements. So we'll just say that there are 2 statements for fiduciary funds. Statement of fiduciary net position, well, obviously the balance sheet, and statement of changes in fiduciary net position, well, that's sort of the operating statement. Let's take a look at the actual chart again. So here you can see under the government-wide, they have these business activities, but those track pretty closely to enterprise, right? You can see the enterprise, but you notice that under the fund accounting, proprietary includes not only this column, but an additional internal service column. And so we provide 3 statements for those things: statement of net position, statement of revenue and expenses, statement of cash flows. And these are accrual basis. You notice there is no corresponding item for funds for the discrete units. Those end up getting captured through other ways in the funds. And similarly, there's no way to capture or look at fiduciary funds within the government-wide, although there are ways that you can see on the different financial statements some information, but it's not as direct as we would have it before. So if we take a quick look at some of these financial statements, this is going to be the statement of net position. Proprietary fund. So remember, the proprietary funds are either an internal service or a enterprise service. And you can see here, business type activities, enterprise funds. And then you can see here, governmental activities. So we've got both the enterprise funds and the internal service fund. Assets, here you notice that they're classified normally according to what we would consider GAAP, investments, inventories, and that sort of thing. When we take a look at the expenses, again, you can see that these are kind of more program-based, although a little bit more distinct than that. And then you say total operating expenses, non-operating revenues. And so we take, if you look, we had, this was the statement of assets, and I guess I didn't capture, just give me a second. I thought I had the liabilities underneath. it looks like so you can go and look at this part of the chapter. It looks like I just captured it so you can kind of see an example of it rather than going through, because, again, proprietary funds we'll talk about, but that's not going to be probably our main focus. And I'm just trying to give an example. It looks like I just clipped the top part of the statement so you can kind of get a sense for it. So whereas that previous one was the statement of net position for the proprietary funds, this one is the statement of revenue and expenses. And so here, again, we've broken it out according to business type activities, enterprise funds, so the ones that do for exchange, meaning they provide a service for a fee. And here the governmental activities that are separate of the internal service funds. And then, of course, what's the other one that we have to have is we have to have the statement of cash flows for proprietary funds. And so cash flows from operating activities, net cash provided in operating activities. So you can see here's finance and activities. And it looks like I've not clipped off the bottom part, which is the investing activities. Did I have financing? So very similar again to what you would see into a business sort of statement, even if they're sort of calculated a little bit differently. When we go on to the fiduciary funds, we only have two statements. We have, now we'll look at that there's actually a breakdown, the type of fiduciary funds. There are 4 different types. We'll take a look at those in just a minute. Here is the statement of net position, so sort of the balance sheet. So you see you have assets and liabilities. And again, I just clipped the top so you can have a sense of what it looks like. And then the statement of changes in net position. So if you have a bunch of assets, that's your balance sheet. If you have change in the assets, well, that's an operating statement, even if we don't want to call it an income statement. So here you can see contributions, investment earnings. These are pluses and minuses to the resources that we have, and therefore it's more of an operating statement. So if that is an example of the different statements in the government-wide versus the statements in the 3 different types of funds, we've looked at examples and done just a kind of a quick overview, which is what this chapter is designed to do. It's supposed to be a quick overview of the financial statements. What is the integrated reporting model? Let's take a look at a few examples. And then this last part, we're going to discuss what is the theory or philosophy of having fund reporting, this modified accrual. Well, in government, there are legal and contractual obligations. For example, when we adopt a budget, it's legally binding. And of course, we don't have that same sort of thing with GAAP. And so a lot of the times, things that happen within the government, it's not that they're illegal or incorrect. They just do not conform with our normal understanding of GAAP. And so of course, GASB, the the Governmental Accounting Standards Board, has dictated that because there are a lot of there's a lot of business-like activities within government, and then there are government core services, that the accounting system must make it possible to present both GAAP and that information that has governmental or legal restrictions. So that's why we have the 2 sets. We've got the government-wide, which is sort of an accrual-based, that sort of conforms with GAAP. And then we have the governmental funds, which are there to explain and to show information about, just those sort of things. What are the programs that the government is required to do legally? What are the resources and expenses or expenditures associated with them? And so that's why we have the second view, even if it's a modified accrual. So the necessity to account for these, to account for revenues and expenditures that are legally constrained for specific purposes, right? We don't have that in GAAP. We don't have constrained for specific purposes. And that has led to the concept of fund accounting. A fund is a separate fiscal entity, meaning it has its own resources, liabilities, and operating activity. And a fund is a separate accounting activity, it has its own records and financial statements. So a fund, how does it get established? A good idea is to keep it as minimum as possible, but they could be established by someone has granted some or endowed some, money to a government for certain things that could create a fund, or by contracts. You may have a contract with some entity to do something, or like if a company comes in and builds a port for a town. Maybe there's going to be some contractual obligations that lead to that. They can be formed by legislation, or the government can have their own discretionary powers to create a fund for specific reasons. The fund categories, as we've looked before, are governmental, proprietary, and fiduciary. Now, within the government funds, there are 5 different types, which we're looking down here. There are the general fund. Well, we've already talked about that. Each government has one and only one. And they're the main operating fund for things such as the core services of police, fire, public works, culture, recreation, education, social security, social services. And this includes some of the support services, like if you have a city manager's office or finance or centralized personnel. A lot of times when you're trying to get hired into the police or get hired into, in a smaller town, you may have to go to City Hall to apply for that, or there may only be one hiring manager within a government in a smaller city or town. Data processing as well. They have special revenue funds. So when funds or resources are given to a government for specific purposes and they can only be used for that, like for example, someone donated, let's say they donated, a lot of times you hear about, wealthy people donating a library or, a bunch of books from their own private collection, and then they donate some money to, create a library and then to maintain that library. Well, that would be a special revenue fund. Some other things are, sometimes they've set aside, for example, when there used to be, the federal government would have to come in and clean up certain locations because they had been polluted. We called that Superfund. Back when we were called the Superfund, I didn't realize, now that I'm just thinking about it, I didn't realize that had to do with fund accounting most likely. And so that would probably be a special revenue fund if the federal government came in and said, you've polluted this river, you need to clean it up. Here are the funds necessary to do that, and you have X amount of time. So that would be a special revenue fund. Debt service fund, a lot of times cities issue municipal bonds, and so you would keep those separate because they have their own principal and interest payments or other long-term liabilities, so you'd keep those kind of separate. Capital project funds, if you're constructing or replacing capital assets such as bridges, parks, all sorts of things that could go into, overpasses, a lot of different things that the government has to maintain, roads, etc. A permanent fund is, let's see, do I have that on here? Oh, there we do. A permanent fund is an endowment. And so when we talk about an endowment, as we've mentioned before in chapter 14, an endowment is where someone gives a certain amount of money, but you're restricted from spending that principal. What you're doing is saying, take this principal, invest it, and then use the interest or the investment income off of the principal to do things with, but don't eat into the principal. And that is, a lot of universities have endowments, their alumni contribute to the endowment. So you keep wanting to build the principal and just live off the interest. Hey, wouldn't it be nice if we could all just live off the interest? But anyway, that's a permanent fund, and it stipulates the principal must be preserved and the earnings can be used to support other public programs. Funds also focus on inflows and outflows of current resources. Remember, that is part of the fund, is to say, we're looking at a program, a bunch of these separate programs that are run by the government. Do they have enough resources to be able to provide the services. And a lot of times it's actually the cart before the horse. We need to provide the services, so those are expenditures. Did we actually allocate enough resources to cover that? We needed to provide the services. We did. Did we actually have the money? And you can think of sometimes like, snow removal, right? They have a certain amount of money. Sometimes they have to go over it and they need to find the resources from some other department or some other fund to be able to cover it during, heavy snow years. GASB, so fund accounting focuses on the inflow and outflow or funds that will be available soon after the period. Now, what do they say available? What does GASB define as available? Well, they have a specific rule with regard to property taxes, because property taxes are one of the big inflows of resources for a government, or for state and local government. And so they say specifically GASB is set up only those property taxes that are collected within 60 days of the end of the period can be considered as available for the current period. Now, state and local governments, according to GASB, can make up their own definition of available for other types of inflows, but it's not unusual for a government to just, globally or, blanket use the 60 days. Although you can see where some people are starting to try and finesse the accounting. They will maybe say, hey, we're going to take something that's 180 days afterwards. Well, is that really a current inflow? But there's nothing that says that they can't do it. It's just that by tradition, we kind of use the 60 days because that's the GASB standard for property taxes. Proprietary funds, again, we've talked about that, similar to a commercial business entity. It uses accrual accounting. And part of what we got going here, the reason for accrual accounting, is we need to determine full cost to make a decision about whether the government can continue providing the services. And full cost is not arrived at through modified accrual. It's arrived at through accrual accounting. So that's why we use accrual accounting, because we don't want to continue, government doesn't want to continue on a business type action, which is sort of a discretionary type action, right? We don't have to provide, well, you would think that we don't have to, we have to provide bus service, but we don't have to provide extensive bus service, right? We can limit the amount, et cetera, et cetera. So understanding the full cost as regards, for exchange or commercial services, or what they call proprietary, we need to know full cost and therefore use accrual. There are two main fund types within that. The internal service, which is you can think of it's servicing the other governmental agencies, but a lot of times an equally good definition is internal services are there to improve the management of resources. So things like central purchasing, which I mentioned before, warehousing. A lot of times city governments have a central motor pool that, no matter whether you belong to this branch of government or that branch of government, they all go and get, city cars or government cars from one spot. And there's one spot that you take it to have repairs done. Also, a lot of times governments will self-insure. If they're large enough, they can get good rates. And also a lot of times they run their own, 401k or retirement benefits, that sort of thing. And they also have a lot of central data processing. And of course, enterprise funds are those are the ones that goods and services provided to the public for a fee. Fiduciary funds, also done according to accrual basis, not reported. It's only reported in the fund statements, as we mentioned, not in the government-wide statements. I mentioned that there would be a number of different types of fiduciary funds. And so the fiduciary funds that we have here are going to be custodial, which is used for cash and assets the government oversees for external parties. Like, for example, they're collecting taxes on behalf of another jurisdiction for whatever reason. And then there's three different types of trusts. There's a pension trust, which is the retirement benefits sort of thing. Investment, a lot of times a main city government with its smaller townships around it will pool their money for investment purposes. I mentioned CalPERS, the California Public Employee Retirement System, has 500 billion with a B of assets under management. And then you have private purpose funds. These are funds created and raised for specific purposes. And perhaps you've seen this before. There are funds for firefighters or police killed in the line of duty. You've seen perhaps people, fundraising efforts to create a trust for the children of the firefighters or police killed in the line of duty. And that would be, for them to go to college or something like that. And that would be sort of a private purpose, but the government would help manage that. I'll just mention that fiduciary funds is a very complex part of governmental accounting, and it's even way more complex than accounting for investments in a for-profit gap situation. So if that's your jam and you want to be more interested in that, that's definitely a niche area that not a lot of people understand. I was reading a novel a couple months back, but it was a legal novel. But it had a lot of detail about the legal profession. And one of the interesting things that I read in it was that this lawyer was pretty smart, could do a lot of different types of law, but he patently refused to do probate law. When someone passes away and you have to be able to, tax and then distribute the assets of the deceased. Apparently, according to this book, and it sounded like he knew what he was talking about, that probate law, most lawyers just won't do it at all. And there's very few people who actually know how to do it well, because it's one of those very dense, rules-driven type areas of the law. Not that most law isn't rules driven, but it's a very difficult thing to do. And so when I heard that, I think, that might be more like a fiduciary fund, because there's a lot of complex rules and reporting requirements. And so, hey, it's always nice to be able to do something that a lot of people don't want to do. So if you're interested, that's a place you can investigate. A classification of the fund balances here, we'll kind of look through them and then we'll go back to the statement and look at it. So classification of funds are non-spendable. Well, first of all, that could be just because of the form they're in. Like, you can't spend inventory even though it is quote unquote resources, or you have a prepaid, that's what the PP stands for. And some of them are in cash or they're liquid assets, but you're just legally not allowed to spend them, like an endowment, right? You're not allowed to spend the principal. So there are some types of resources that are labeled non-spendable. And then we've got a couple of grades of restricted or restrictions. So we've got the highest, which is kind of restricted use, and that's restricted by external providers or legislation. And when we say restricted, we can't change our mind. We have been restricted by either law or by the provider of the resources, and it's not like we can decide one way or the other. It's just restricted, and that's it. Committed is a restricted use, but it's restricted by the government's own decision-making authority. But as you can imagine, the government can change their mind, but they got to go through a process. They can't just do this willy-nilly. They've got to go through a process, take a vote or whatever the process is, and they can remove the commitment and then reassign it to something else. Assigned is even less restricted. It's not even restricted. It's just more, I would call what we call earmarked. It's assigned or intended for a specific use and is not restricted or committed. It's just, we're kind of setting it aside. If something else comes up, we can easily change our mind about that. And assignation, or, the ability to assign, is sometimes done by the government, or sometimes they delegate that authority on how to assign funds. Like, we give X amount of funds to the Park and Recreation, and then therefore they can assign those funds how they want. And then, of course, unassigned is everything that doesn't fall into one of these previous four categories. So that's sort of the residual. Everything that doesn't fit into one of those four categories gets placed in unassigned, and those are the funds that remain from the other categories in the general fund. Last thing, and then we'll go and take a look at these classifications. What constitutes a major fund? Well, it's got to be a large dollar important fund. And so I have some very brief details here. There's a two-step criteria. You have to meet both A and B. A is that a major fund has to have one of its elements, either the assets, the liabilities, the deferred outflows, or the deferred inflows. And that major fund has to have one of those elements be at least 10% of that type of element of all of the funds in that category, whether it's the government or the enterprise funds. And so what that means, if you've got a fund to where the assets in this fund represent more than 10% of all the assets in the enterprise funds, that's step A. And then step B is, well, you have to do that same thing again, but rather than segregate between government or enterprise funds, it has to not only clear 10% within its category, whether enterprise or government, it also has to clear 5% of all of that element for government and enterprise funds together. So, for example, you've got an airport, and its assets are 10% of all of the assets for all of the other type of enterprise funds. That would pass the first category. And then you would say, okay, does the assets for the airport not only cover 10% of the assets within the enterprise funds, but does it cover is it more than 5% of the total assets for both enterprise and government funds combined? And it doesn't have to be assets. It could be any of those four elements: liabilities, deferred outflows, deferred inflows. But it's got to meet that 10% in category and 5% overall. And once it does, that can qualify as a major fund. And you saw Denver, quite a big city, only had one major fund, right? I forget what it was, health services or something like that. Non-major fund reporting, that's the rest of them aggregated and reported in a single column. And believe it or not, if you remember doing your cost accounting, remember variances where you had to compare budgets to actual. Well, GASB requires budget to actual comparisons, and it's a required supplementary information. And so GASB requires budget to actual comparisons for the general fund and each major fund. Okay, well, let's just take a quick look back here at the bottom. We're looking at this is the fund balances, and you can see non-spendable, restricted, committed. They didn't even list assigned, so that's fine. And then unassigned is the balance. So you can see we go through and we figure out the liabilities, deferred inflow resources, we figure out the fund balances, and then we break out the fund balances into those 5 categories. Looking back here, you can see general fund, major fund, other governmental funds, and it's major funds are a big deal and kind of they're driving part of the government. So it was interesting to see that Denver, maybe it's the fact that Denver is so big that it's hard for any particular fund to reach the 10% and the 5%. Maybe that's the reason why it doesn't have more major funds, whereas a smaller city may have enough big individual items that they may have a few more major funds. And then, of course, we aggregate the rest of the others in the other governmental funds. Okay, I think that's all. Let's just double check here. Is that the end? Okay, just a quick mention, Learning Objective 5, in the textbook, there are some good not-for-profit journal entries. Good examples of journal entries start on page 173. So if that is, that was for chapter 14. We don't have the same thing yet for governmental. In fact, most of the textbook is about governmental, so we'll be going through that here in the next set of chapters. Okay, I think that is about all that we have for this chapter. As you know, that we have a exam coming up. I have provided the outline as well as the quiz, and we'll have one more session to kind of prepare for that, which is optional. And if you have any questions, let me know. Hopefully things will be a little bit more regular as far as all of the information and homework and other items to keep you on track. Have a good day, and I will talk to you soon.